Today I want to talk about how both Ken Griffin and Citadel are going, if not have already gone bankrupt, as Kenny G is panic selling his assets in Miami. And I also want to talk about how this impacts the AMC squeeze. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Bossman tweeted saying Kenny G is having a fire sale in Miami. He sold property for $18.5 million that had an appraised value of $44 million. Kenny G has just panic sold one of these recently purchased Miami plots of land for less than half of its actual value, and even less than he paid for it a few years ago. So it says Griffin, the founder and CEO of Chicago-based Citadel, sold the lot of 14 Star Island Drive. Griffin acquired the property in August of 2020 for $24 million, but it was recently appraised at $44 million. The deed recorded Wednesday evening shows the nearly 1 acre lot sold for only $18.5 million. Now, obviously, as a result of the recession and the current economic crisis, it's unlikely the plot of land was really worth $44 million, but it's clear to see Kenny G has just taken a massive loss. Not only has he sold the plot of land for less than half the appraised value, half of $44 million being $22 million, but he's also sold it for less than his original purchase price 2 years ago. He purchased it for $24 million and sold for only $18.5 million, a loss of over $5 million. Now, this is actually the exact same plot of land or part of the plot of land that he bought to build himself a new home or he bought to build his mum a home. But it seems he's now panic selling this recent investment. Ken Griffin is clearly desperate for more cash flow or desperate for more available margin, as he's now starting to sell off his physical assets. Over the last 6 to 12 months, Ken Griffin has already been recalling some of his investments, recalling previous loans, and actually selling off a portion of his business. Clearly, the next logical move for Ken Griffin is starting to sell off all of his physical assets and all of his property. At that point, once he's sold off everything and he's exhausted all of the possible cash flow that he can, then he's going to have to close out of his long positions and close out of his shorts. And obviously, when Ken Griffin and Citadel close out of their short positions and likely have to close out of any total return swap contracts they've entered into as well, and any synthetic shares they've created on behalf of other hedge funds, at that point the AMC squeeze will begin. Now, on top of that, Ken Griffin and Citadel aren't the only hedge fund and market maker taking on significant losses. Hang Loose tweeted saying as the bond, housing and everything else bubbles start to pop, hopefully these crooks feel more burn. It says hedge fund losses mount at Tiger Global and Whale Rock as stock pickers reel. This year's drop at Chase Coleman's Tiger Global widens to 52%, and the flagship fund at Socrates Whale Rock declined 6% last month. And Hang Loose believes that Socrates Whale Rock Capital is Ken Griffin's ex-wife's hedge fund. But clearly we're seeing these massive hedge funds like Tiger Global on this massive losing streak once again, now down 52%. And right now you can currently get 15 free shares worth up to a whopping $30,000 if you sign up to Moomoo right now using the link in the description below. Moomoo doesn't accept payment for order flow as they don't route your trades through Citadel or through Apex Clearing. Actually, they route their trades on their own. Moomoo is very easy to use and it's very customizable, and therefore it's brilliant for buying those AMC, those GameStop and those Ape shares. Now, I've seen a number of tweets recently talking about how we should be questioning Aron more for not doing enough to stop the naked shorting. Now, I personally have my own views on this topic, but first I want to quickly touch on the views from Janjak. He said Aron has nothing to do with the mode and method of trading of those market makers' high-frequency trading systems. He said the trading of the market is based on these programs and algorithms. He said our complaint should really be directed to the SEC, to the New York Stock Exchange, to FINRA, and to the Department of Justice, not to Aron. I think it's important to remember that while Aron can try our techniques and our ideas, he can't trade the way stocks are traded on the New York Stock Exchange, and he can't change the way these high-frequency trading algorithms work. I think it's important to remember that Aron doesn't have a simple on-off switch for the naked shorting and for the market manipulation. He can't just call up Ken Griffin and say, Ken, please can we stop naked shorting AMC today? My investors have had enough. My investors now want the squeeze, therefore today you've got to stop all naked shorting and market manipulation on AMC, and unfortunately you're going to have to find another company that wants to be manipulated. Aron obviously doesn't control Ken Griffin, he doesn't control Gary Gensler, he doesn't control the SEC or the wider Department of Justice. Aron simply can't turn off the naked shorting of AMC and Ape shares. He can try different ideas and techniques like share counts or by registering shares on other platforms or even by creating separate preference share dividends like the Ape dividend. You could argue that Adam Aron's job is actually to improve the AMC share price. While that technically is true, he can only really improve the share price by improving the underlying company. And I personally believe Adam Aron is doing an excellent job of improving the underlying AMC company. He's improved the cash flow, he's paying down debt, he's also expanding and acquiring competitors' cinemas. Obviously, Adam Aron doesn't control the New York Stock Exchange, he doesn't control the Fed, he doesn't control the SEC or FINRA, and he certainly doesn't control these billionaire market makers like Ken Griffin. He obviously can't stop the naked shorting, but what he can do is try to improve the company and try our techniques and our ideas and our suggestions to try and cause the squeeze. But at the same time, Adam Aron doesn't know 100% what will and will not cause the squeeze. He can only do what we do and trying suggestions and ideas. And as Co-Famous Boy tweeted, he said, "It's funny to laugh at us and bash Adam Aron about why the price is going down, but you're going to be wishing you would have bought more Ape shares at $2 and below when it hits $800 per share." If Ape squeezes from $2 to $800 per share, I'll personally wish that Ape actually fell lower down to $1 or 50 cents per share, because then I could have bought twice as many or 4 times as many shares when the squeeze actually starts. Would you rather Ape squeeze from $2 per share to $800 per share, or squeeze from 50 cents per share up to $800 per share because you could load up 4 times as many shares? It may even squeeze higher than $800 per share. It may squeeze to $1,000, $2,000, $5,000 or $10,000 per share. And all I know is that I'll be wishing that Ape actually fell lower so I could buy even more shares. But while he can try all of these ideas, he simply can't just turn off the naked shorting. There's also a lot of legalities as to what he can and cannot actually admit to. Adam Aron has obviously said a number of times that he's not aware of any such instances of naked shorting. But at the same time, why did Adam Aron pull down his pants for trade trades? He said himself that after several looks, he's not yet found any evidence himself of naked shorting with AMC, but why did he pull his pants down for Trey? And you may say, Tom, he simply just had his shirt and tie on for the interview. Now, while this is something that I might do in my 20s or you might do in your late teens, this isn't something that's typically done by gentlemen in their 50s and 60s. Gents in their 50s and 60s tend to wear a full suit or at least the shirt and trousers at all times around the house, regardless if they're in an interview or not. Now, regardless if Adam Aron does manage to find a technique or a catalyst that causes the squeeze or not, I know the squeeze will be caused by the coming market crash. And as Gold Telegraph tweeted saying, breaking news, the Federal Reserve is now posting its first operating loss in years. And they said the question is, which central bank is not taking on heavy losses right now? We've got the US Federal Reserve, the Bank of Canada, the Reserve Bank of Australia, the Bank of England, the Monetary Authority of Singapore, the Swiss National Bank, and many others are now all in the red. We've got tons of these major central banks already taking on heavy losses and trying to prop up the economy by buying additional bonds, just like what's happening over in the UK. This is temporary quantitative easing to try and save the economy for a few more weeks to avoid that coming market crash. But we know they cannot save the economy, and we know the market is crashing. Stocks are already down over 20% on the year and still have significantly further to fall. Jamie Dimon was recently quoted saying the S&P 500 can still fall another 25 or 30% and could end up being down over 50% for the year. And Ned Davis Research is now saying the odds of a global recession are 98%. But all that really says to me is the odds of the AMC squeeze is now 98% guaranteed. We know a recession will cause the AMC squeeze, and therefore if a recession is 98% guaranteed, that means the AMC squeeze is 98% guaranteed as well. And as Jan Jack tweeted, he said the Fed has no other choice but to drive the economy straight into a recession in order to fight runaway inflation. Credit must be tightened across the board, and that will surely result in a wave of default, and unfortunately the government has no way out of the woods this time. This Yahoo article says the Federal Reserve is clearly okay in plunging the economy into a recession. One Wall Street Pro said if there needs to be a US recession to bring down inflation to appropriate levels, the Fed would be cool with that. He said, and the Fed has sort of softened its tone a little bit over the last 2 months. They used to say they could probably do this and achieve a softish economic landing, but now they've already said there will be pain felt. They said the dollar is very strong and interest rates are rising very fast. So I think the idea that it's going to be a really mild recession, if that, would be lucky. I'd say it's going to be a tough trade-off for the Fed once the numbers start setting in. Clearly a recession is on its way, the market crash is already happening and is likely to continue, and this will cause the AMC squeeze. Hence why Ken Griffin is already panicking and panic selling his assets to shore up additional cash to try and hope that Citadel survives. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.